Hello, the product I'd like to talk about today is the cTrader Grid Trading System strategy. Okay, so what I'm going to do now is, for those that aren't familiar with our website, I'm going to navigate to the actual product page. So I go under Software, Fully Automated Trading, and you'll find it under here under Grid Trading System, this button here. Okay, so this is the product that we're actually I've got on offer. We also offer a trial version, but you send us an email if you want to have the trial. Gives you all the information you need, the type of strategy it is, the kind of results you get, okay, and a brief description of the parameters as well. So what we're going to do now, this video is going to go in here. We're going to add a video to it, okay. If once you've installed the software or you're using it, you get any problems, just click this button here to submit a support ticket. Okay, and we'll be able to resolve it for you. And if you want to use our services or any other information, use these links here. Okay, so what I'm going to do now is go to the actual cTrader. Now what I've got here is not the results of the strategy. This is showing you a grid system without any risk management, and it's showing you a grid system without any technical indicators to tell the robot which direction the trend is probably going to go in. Okay, so a lot of the basic grid systems that you'll see on offer at the moment, you'll see these grey lines here at the bottom. Now your eyes might just look at this yellow line and think, wow, look at that. I get, all this profit there at 43%. I get 2,171. I'll just go through this again. This is a back test from the 28th of January to the 15th of, is that July? January, February, March, April, May, yep. So say around 6 months. So this is just showing you results for 6 months on a random time frame that I've chosen. Now what I wanted to show you here isn't so much that. I wanted to show you what drawdown is. Now a standard grid system on its own, you've got massive amount of drawdown. So every time you see these grey lines go down here, this here shows you at one point you had one or more positions open that were down. They were in debt, so you were losing. In this case, if I hover the mouse over this one, it shows me the balance drawdown, 35% balance drawdown. That's quite high. Okay, so this is showing me that that I had a big balance drawdown of 35% and an equity drawdown of 20%. Now that's quite high. If you were to get to, say, example, 50% equity drawdown, that's the same as somebody getting a coin and flicking the coin with your friend and saying heads or tails. So it's like you might as well go to a gambling casino. So this is like a 50-50 odds if you get around 50%. So you don't really want to do that unless your trading style is such that you want to gamble, and if you blow your account, it doesn't matter, you do it again. That's another style of climbing it completely. Most of our robots don't follow these rules. Most of our robots follow rules of the minimum amount of drawdown, the minimum amount of risk with a reasonable return. So very safe in our view of trading. Okay, so you can just hover your mouse over here and it will tell you the drawdown that you had. Okay, so the idea is to get rid of these drawdowns, get rid of these grey lines. So what we've done to do that, I'll go to the parameters now. What we've done is we added a stop loss, but you don't need to use a stop loss with this strategy. You can set it to 0. We've got a volume exponent, which is, I'll go through the parameters in a minute. Just want to show you the actual results of this robot once you put some values in, okay? And then I'll go through the values. So what I'm going to do now is I don't have any trailing stop. It doesn't pause on news releases, and it's using no technical indicators to determine the trend. So what I'm going to do is I'm going to load in some parameters that we've already got for Euro GBP. Okay. Actually, I don't need to do that because I've already got one below this one. I've already loaded and run it. So this is using technical indicator, and I'll go through the parameters now. So I'll go back again. So this has got an 80% return over the same time frame, okay, and if I go to the one above, it's got a 43% return over the same time frame, but huge drawdowns. You can see these blips, okay. Now if I go back to this one, go back to backtest. If I click on the one below, so the one below is actually using the DINAPI stochastic as a technical trend indicator. It's not using news releases. So these little drawdowns you see here, which is 2.4%, it's very small, but I wouldn't be surprised if you could reduce the drawdown even further by not trading during news releases or closing positions during news releases. So you are opening yourself up for risk if you trade during news releases. But this back test shows without using the news release manager. Okay, so what I'm going to do now is I'm going to just close this down because I don't want Outlook coming up. Okay, I'll close that down. Okay, so what I'm going to do now is quickly go through the parameters, then I'm going to explain in a bit more detail about the returns, okay? So show copyright info, you can just select no for that. That just goes to show that we're the people that built the system. There's no licensing on this product, so it means you can install it on multiple machines, but we just put our copyright text on it so people don't try to copy it and sell it themselves. The first volume, I put 2,000, so that's 2K. Okay, so that's pretty straightforward. If you want lower risk but lower returns, you just reduce the first volume. If you want higher, you increase the first volume. Okay. Now this is not using a stop loss because it's closing on a. What's it closing on? What's it closing on? What's it closing on? It's actually closing. It's actually not. It's actually using the grid system to actually do the closing for you. So it's not actually needing a stop loss. Okay. You can use a stop loss to experiment with different parameters, but in this case, most of these systems, grid systems, don't use stop losses. That's why you normally see, if you look at any other grid system, you'll normally see massive drawdowns. You'll have blips, like I showed you here. You'll have huge blips in the when you've got positions that are open that are massively going in the red. Okay, so you could have a position opening that says you're £500. If you close that position now, you would lose £500. Okay, so the idea is we don't want that. So going back to this view here, now we've got pip step. Now it might sound crazy for a Euro GBP currency, but every time the price retraces 5 pips, it opens a position in the opposite direction. So if it retraces south 5 pips, it will open a long position. If it drops down again another 5 pips, it'll open up another long position. Now each time it opens a position, it uses a volume exponent. Okay. Now the volume exponent means that every time a position opens, that it goes back, it opens up another one with double the volume. Now for this one, I'll just clarify, this isn't every time it drops back 5 pips. The volume exponent will only double the volume every time there's a winning position. So each time you win and it closes, say you started with 2K and the volume exponent was 2, I don't know if I just changed that. Every time a position closes in profit, so you win, it will open up another position, a retracement of 5 pips, double the volume. So the next volume would be 4. If that wins, if it retraces another 5 pips, it will open up another volume, double. Okay, so the idea is that every time a position closes and then it retraces, it'll double the volume. Only if it's a winner. If it's a loser, it resets it back to 1K again. Okay, I hope that's straightforward. So the idea with this parameter, the higher the value, the higher your profits. But not necessarily, it doesn't mean that your risk will be lower. It also increases the risks. It means you'll have a higher position size, and if that position loses, you've got a higher potential of losing. Okay, what I'm going to do is just change this to 4. Okay, I'm going to change this to 4 and just run this back test. And just to show you the difference, I've not run this test yet. See, it's binned out straight away. So you don't really want to be doing that. You want to set the volume exponent, something a reasonable value. I think we had it as 3. So again, like I said, if you increase it to too much of a higher value, and there's a higher probability that, oh no, 3 was a bit too high as well. It was 2 last time, wasn't it? So like I said, if you do it too high, each time the have a winning position, it will actually double the volume, and there's potential that you lose. So in this case, I've just put it to 3, the volume exponent, and the returns are pretty good actually. You've just got 253% return over a 6-month period. If I go to trade statistics, you've got a net profit of £13,000, starting capital of 5, entering equity of 17,000, and the drawdown is 19%. Okay, in our view, that's too high. So to be conservative, I would probably leave your volume exponent to something like 1 or 1. No, 1 it means it will never increase. So we had 2 previously. I'm going to go to 1.5. I'm going to go back to 2, sorry, because it's the original value. I'm going to run this again because I wanted to show you the higher the volume exponent, the higher the returns, the higher the risk, and the higher the potential drawdowns. Okay, so if you want to start off using this trading robot, use a very low value. Don't use a higher volume exponent. Start with something like 1 and then go to 1.25 and then 2. So I just want to show you the results of this. You can see it's got an 8.7% equity drawdown. Okay, it's done 148 trades. 142 of those trades were winning and only 6 were losing. Okay, that's very good. Now the drawdown we can reduce even less and just reduce down the risk as well. So if we change it to 1.5, so this value is probably one of the most useful values you'll use with this trading robot. So if I start that again, so what you should see now you should see lower profits, but also a lower drawdown. Now, again, none of this is using the news release manager yet. The moment you start using the news release manager, we can't really use the news release manager in backtesting. You should see lower drawdown still. It should reduce it even further. Okay, if I do the trade statistics now, so we've got 5.77%, which I think is a good value to be looking at as a drawdown, and a net profit of 1,967, or a 37% increase, which I think is very good for this little robot. Now you can try it with different areas. For the price we're selling it for, $29.99, don't expect miracles, but I think it's a very good price for what you get. Okay, definitely for what you get, it's a very good price. So what I'm going to do now is go down the other parameters. So each of these parameters we've taken from our switchback robot, and this is easier for you to optimize or to find good parameter settings for other currency symbols. So because there's not many parameters, it'd be easier for you to understand and easier for you to optimize and backtest and get good settings for other currency symbols. If you don't want to do it yourself, we can do it for you. And we charge £50 to find the right currency the right parameters for a currency symbol, okay, or instrument. Okay, what we've got now is max spread. Now this is useful. So say for example the markets are running really slow and there's not a lot of trading going on, but the spread's very high. You don't really want to be opening up a position if your pip step is 5 pips and the spread is 5 pips. It will just open and close straight away. So you can set your maximum spread to 2. And then that won't happen, okay? And this also increases your profits so that if it's opening trades in periods of low volatility and the spreads are very high, it just won't trade. It will wait until there's more trading going on, the spreads drop right down, and then it will carry on trading to increase your profits. So max spread is a very important feature to have with this robot. Another important feature is max trades in red. Now what this means is, because this robot opens multiple positions, it's not just one position open, one position closes. If it keeps opening positions, it keeps dropping back, retracing 5 pips, opens a position, keeps doing that, it could get to a point where you could have 50 losing positions, okay? So what this does, it says, okay, if there's 4 trades open that are losing, don't open anymore. Obviously there's something wrong with the trend. Obviously it's not going the direction I want, so let's stop trading, and this robot will do it for you. So you could experiment with this value to get better returns. So this is another important value to use. The other value is average take profit, the next one down. Now this smart grid trading system will already intelligently, it's quite intelligent, it readjusts your take profit. So there's a lot of logic in there that actually keep changing your take profit to get maximum profit out of it. It's not a trailing stop, it uses another feature. The average take profit does affect your overall return. The higher the value, the higher your each position wins. So it would be 25 pip wins. Okay, so experiment with this value to different values and see what you get. Now the next risk management we've got is including a trailing stop. Now this robot works very well without a trailing stop for this currency pair, but maybe other instruments, I don't know, something like cryptocurrency or something, you might want to use a trailing stop. So this is a standard feature for a trailing stop. You can include it, yes or no. You can set the trigger, so once your position is gaining, say, 7 pips, it will move the stop loss to 1 pip below the price, and it will trail behind that price by 1 pip as it keeps going up to lock in the profits. It's a standard trailing stop feature, okay? The next feature is the news release. Now on the product page, we've got a link to the news release manager product page. This product is sold for £10, but you get it for free when you buy this product, which means you get it for $19.99 really, because you get the news release manager as well. And what this does, this is a very clever feature. If there's a high impact news event about to occur, you can set how many minutes before the news release and how many minutes after news release. So you can say 30 minutes before a news release, stop trading, and then you have the choice here to close positions or not. So you can close all your positions. 30 minutes after the news release has occurred, which I'd normally leave it 2 or 3 hours because there's a lot of noise straight after a news release, you can set it to continue trading. So it's fully automated. So if you're at work or you're out on holiday, you don't need to go to your charts to say, oh my God, there's a news release, I better manage my positions. It does it for you, okay? You can also buy this product standalone from our website. Now the next feature, which is probably the most important feature, is the DNAPLI stochastic. Now we built a customized version of this DNAPLI. Okay, it's a very good indicator. It's probably one of the best indicators I've ever seen for determining trend or changing direction. Now, this is used and makes a big difference in this drawdowns compared to no drawdowns. Okay, and that's mainly due to the fact that there's a feature in it that can intelligently determine if the crossover on the DNAPLI, as it turns and crosses over below or above a threshold, is a fake signal to enter a buy position or exit a buy position. Okay, so what it uses is a crossover distance. Now it's kind of a basic formula that actually calculates the distance between the two lines when they cross over. Actually, if I stuck with DNAPLI stochastic on the chart now, I can quickly show you. So I'll just quickly do that. So again, on the product page, we've actually got information. If you click on the link, it'll actually take you to the DNAPLI stochastic product page, and it'll actually tell you more details about this indicator. Okay, it'll actually tell you how it works. So there it is there. Now if I bring this down, so what this curve distance, so when you have this turn in here, you'd expect here, if I was looking at this on a chart, I'd expect to enter a buy position, okay? Because I would expect it to actually go bullish there. But if you have a look, the lines are very close together. The red and the blue lines are so close together, there isn't a natural curve bouncing back up. So again, it mirrors the price action in the candles. So what this robot would have done, the curve distance would say, hold on, let's not trade there. Let's not enter a trade because it looks like it's not actually going to go up. If I was to go somewhere else and I'd find more of a natural line, like this one, for example, if you have a look, there's distances between the red and blue lines. It isn't messy like this. This logic pretty much just says if there's a crossover and there's a certain distance between the two lines, enter a buy position. So if you did it just by watching this chart here, you'd enter the buy position there and you'd actually make 7 or 8 pips profit there. So it's a very useful indicator, and this is why we're using it for this robot to determine trend. Okay, so again, you've got your buy and your sell threshold. So it's saying that I've turned it off now. So it's saying that when the signal line is above 76 or below 25, enter a buy or sell. And again, the DNAPLI product page will explain it in more detail. I think there's a video for that as well. So that's all your parameters to be used. Now again, we've run this on different brokers and the results are pretty much the same. So the idea is you can use this straight away as a fully automated system. You can manage it semi-automated if you want. I would integrate the news release manager, but as you can see, standard grid systems suffer from drawdowns. Some of them are better, but every time you see these kind of grey areas where it drops down, you've got potential of massive losses. And if you just use a standard grid system without any kind of technical trend, you're also liable for completely clearing out your account. So you can pretty much lose your account fast. You might make fast gains, but you can lose your account. So our idea is to create a system which is low risk, as much low risk as possible. But again, we can't guarantee, the markets are not predictable. We can't guarantee that you're not going to lose money, but for the value that we're selling this, you've got a good chance of making something of it. Okay, thank you very much. If you do like this video, please give me a thumbs up at the bottom, and thank you very much.